Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at why using index ETFs may not be the best choice for your portfolio. We will also look at stocks that you've chosen for me, and then we'll get into the market so I can share with you my thoughts on where it's heading, along with answering all of your questions. Hello, I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button now. Remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian Stock Market show every Tuesday, 7 to 8 p.m. Australian Eastern Time, because this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now, every day more and more investors are choosing to gain exposure to the Australian stock market through using exchange-traded funds, or ETFs. Now, this is especially so with beginners into the stock market. Now, ETFs are heavily promoted as being a low-cost way of gaining a return, similar to an index, which is true. However, when I ask investors if they wish to gain a return similar to an index or more, they always say more. Now, so how do you gain a better return than the stock market index and still be low cost? Well, the answer is really quite simple, and that is to invest directly in stocks yourself. When confronted with investing in stocks directly, many investors start to feel a little nervous. So they also suggest that they could not buy all of the stocks in an index such as the S&P 200, which would see them needing to purchase 200 stocks. Now, the good news is that you don't need to, and in fact, it's far better if you don't. Now, you see around 50% of the market capitalisation in the ASX 200 index comes from just the top 20 stocks, and these same stocks have a great influence in the return the index achieves. Now, in the research for my books, I used the same top 20 stocks with the results showing that anyone could achieve better returns than the index fund or an index ETF by simply owning between 8 and 12 of the top 20 stocks. Pretty simple, really. Now, in owning these stocks, you have low fees, as you are only subjected to brokerage to buy or sell, as you would for an ETF. However, there are no internal or ongoing fees for directly holding shares, making investing in stocks very attractive, especially when your return is actually better. Now, greater diversification than you could for yourself is another highly promoted benefit of investing in exchange-traded funds, and I'd argue that holding 8 to 12 of the top stocks in the Australian market in your portfolio is as diversified, if not more diversified, than holding onto one index ETF. So what's the conclusion? Well, anyone armed with a small amount of knowledge can invest directly in a portfolio of top stocks and achieve returns that are superior to that of an index fund or index ETF. Now, regardless of which way you choose to invest, it's really important that you understand what you're investing in, why you're investing in it, and how to manage that investment. Now it's time we discuss the market from last week. Now let's get started with looking at what were the best and worst performing sectors last week. Well, utilities was the best performer, and that was up 0.56%. Now this was followed by industrials and financials, with both up around 0.3%. The worst performing sectors last week, that included consumer staples down 3.44%, followed by information technology down 2.26%, and consumer discretion, that was down 1.52%. The best performers in the S&P ASX top 100 stocks, they included Cleanaway Waste Management, which was up 9.62% last week, followed by Ansell, which is up 8.25%, and the Star Entertainment Group up 5.29% last week. The worst performing stocks, they included Beach Energy, which was down 23.65%, followed by JB Hi-Fi down 7.7%. And Northern Star Resources, that was down 7.64% last week. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
I think last week on our stock market, the most interesting thing about our stock market was it wasn't that interesting last week because it actually didn't go too far. I did think our market should have risen last week. But then, what it should do and what it does do is two different things. I mean, we don't control the market. Basically, all we do as individuals is control when we buy and when we sell. That's it. We can't control anything else. When our money's on the line or when our money's in the market, then the market will do what it's going to do. The stocks will do what they're going to do, or the price of those stocks will do what it's going to do. But we can't control that. And that's really what I'm getting at, is we can only determine when we buy and when we sell. And that's really why we need to have good rules around both of those, or rules around why we buy, when we buy, and how we're buying, how we're managing the stock. And then lastly, which most people get or struggle with, is the exiting. When is the best time to exit a stock? When's the best time to sell a stock? And that's the biggest question we've got asked. And at the end of the day, there's lots of rules and techniques around doing that, and it's not for this report to go into that. But right now, at the moment, it's okay to hold stocks at the moment. The market's not falling away, but it's not rising. But let's go and have a look at the chart and just see exactly what's sort of going on, because it is causing a little bit of frustration for a lot of people, including people like me who think it should be still moving on. If you look on the left-hand side of the screen, this is our monthly chart that I've showed you numerous times. And the last bar on the chart there is April. So that's the close for April at 7,290 points. But you can see it just came off to close off its high, which it had made the previous week, or this previous week here. So the bar that I'm sitting at on the right there in April, that 7,358 was made in April. And that's the all-time high of the All Ordinaries Index at this point in time. Now, we don't have a May bar yet here on that, even though we're on the 3rd of May, because today is the first trading day of May. So after today, we'll see a little bar coming in onto that here. Now, as I was saying to you a little while ago, when we're looking at this monthly chart, you can see how the momentum of the market was running right through here till around January. But since then, we've had February, March going sideways, and now April's taking off. So if I move this now, you can see now the momentum is actually slowing on the market after being quite vertical through here and quite vertical through here. So markets will move and ebb and flow in terms of their momentum and their volatility. So the momentum has slowed a little bit. So don't expect the same returns, etc., that we got earlier last year right through to this sort of midpoint last year. But I do expect our market will move higher this year and will do quite well. But let's get onto the weekly chart and have a quick look at this. Now, look at this. Since we've seen here, looking back into mid-February there, we're looking back even further to the end of January. If I just put my little tool on here, going back to the end of January, or the start of January there, right till today, we've only up 3.79%, even though we've had some down moves and upward moves in here. And if we look a little bit closer into the last few weeks, so we're looking there from the start of April, or that first week in April. Let me click on my point. You can see it's like less than 0.5%. So in roughly 4 weeks, the market's really gone nowhere after had this one beautiful big week through in April where the market was very, very strong, hit this momentum line that I've had on here, and it's really struggled to break through that. I thought it would do that. I was hoping, or what I was talking about last week, was that it should, I would thought the market, if this was the down move that I was expecting, remember I was talking about in this week that a down move would happen in the next 1 to 2 weeks. And I was last week I was talking about this at the few days down here where it did make a lower low of 7,166 points, or lower than that low there of 7,209. I thought, well, maybe only a few days down and we're going to move up through the next 4 weeks to late May and then make the next peak there before our next pullback, because the market rises and falls. It always does that. Rises for a few weeks and falls away, rises for a few weeks and falls. This is pretty normal. But we didn't get a higher bar last week. This is an inside bar. And if I look here, you can see the high of this bar was 7,358.8 points. If you look at this one last week, 7,358.2 points. So 0.6 of a point lower than the previous week. So it's actually an inside bar, a very tiny one. So this coming week will tell us where the market's moving. So if we see a downward move going below the low of last week, so that's 7,270.1 points. If we see the market move down below that, then we may be seeing those 1 or 2 weeks down through here and then move back up towards the end of April. But again, if we do open up high and we move through this high, through that 7,358 high, then we'll probably get next to 2, 3, 4 weeks up towards the end of May before the market starts its next downward move. Basically, to give you a bit of an idea, the market moves in roughly 7-week movements, roughly say 4 or 5 weeks up, 1 or 2 weeks down, or 3 weeks up, 4 weeks down. There's different patterns that it actually does make. But generally somewhere around that sort of 7 weeks-ish, it'll move up. It might move up for 6 weeks and only come down for 1 week. Occasionally it'll move up for 8 or 9 or 10 weeks and then come down for a few weeks. It doesn't always sit that pattern. But when we look at generalities in terms of, or probabilities is probably a better way of saying it, it generally does what I was just saying, is that it might move up for 4 or 5 weeks and down for 1 or 2 weeks. So that's generally what it does, but it doesn't do it all the time. But right now I'm thinking this week will tell us whether the market will go down for the next 1 or 2 weeks and make a lower low. I'm not expecting any major movements. The market is not wanting to fall away, and it's proven that over the last 3 months. It sort of goes it's been going sideways, bursts up a little bit, going sideways, which is what it's doing right now. But it's not strongly bullish. That's the other thing that's concerning me. Whilst it's not bearish, it's not strongly bullish, and it does have a move up. So what the market's waiting for, where the big money's waiting for to push into it, I don't know what's waiting for. I mean, obviously there's concerns around inflation possibly coming in the economy. We've had talks about that from experts around Australia and indeed around the world, in the US and other places, talking about inflation. We've got issues around all of that. So it just remains to be seen what's going to happen with the market. But for now, it really does pay to protect downside, because I don't know if anybody's ever complained to me about the market going up. They just don't. And so it's about when it goes down. So as long as you're protecting your downside, then there is no issues for you. Make sure you've got your stop losses on, and if the market does go up, stay with it, stay with the stocks, but don't try and speculate at the moment. I think this is a time where speculation, or high speculation, is one that should be put to the back burner at this point in time until we know that we've got strong direction moving up or strong direction moving down, if that's the case. But anyway, that's my take for the market this week. But let's get into the first question that we have. Now, the first question we have today is from Tim, and Tim says, "Hey Dale, if inflation kicks in, how would it affect the markets? Would it inflate things like the property and equities markets to higher heights if in turn wages grew with it?" And he says, "I see everywhere that economists are talking about is a major concern, just trying to understand it a little bit better." It's a really good question, and I did sort of start touching on it just a few seconds ago in my report. And really, when inflation starts to move, and it gives what is inflation, and inflation is positive quarters, basically. It's like is rising prices. So when you're getting consumer goods, consumer staples, consumer discretionary things moving up. Now, I know in the terms of, at the moment I'm looking at building a house, and I was chatting with the builders, and they've saying the price of timber and the price of steel has pretty much doubled. They've gone through the roof, because there's so much demand for them at the moment right across the place that they're charging higher prices for it. Importing of woods that we might need for building things, whether it's houses, could be furniture, could be anything that's built with wood, they're paying higher prices. So therefore it may not just impact housing prices or the price of building a house. Might impact flooring for houses. It might impact things such as tables and chairs and cabinetry, a whole range of different areas that could be pushing there. So you will see some inflation. But again, once this pent up demand that we got through COVID, because with COVID people weren't building new homes, they were pulling back on all of that sort of stuff. We were worried about whether we had jobs. We were worried about what was, in terms of health, a whole range of things. We're in lockdown. So we weren't buying homes, we weren't moving homes. Now all of that's been happening the last sort of 3-6 months roughly, as Australia has opened up a little bit more. But we're still a bit cautious. I mean, we've got issues still around at the moment with the Western Australia. We've got issues with people coming in from India. So we're still not out of the woods yet, even though we're pretty free right across Australia. But I think a lot of the demand will drop away a bit and then manage it. I don't think the government's too worried about inflation at the moment. If inflation does come in, they'll raise some interest rates. So that'll be the first thing. They'll be raising interest rates, maybe 0.25%, maybe a little bit more, maybe a little bit less. But they'll be raising that a little bit. That will be a bit more concerning for your housing loans. So to me, the stock market will rise with inflation. So property markets will rise with inflation. Yes, wages could go up, but I'm not sure whether that's going to be a big driver of inflation at the moment. But it's more of the goods and services right now. Microchips, I was chatting with Jim Beach for my recordings for Flix that I do, our Talking Wealth show. I was talking about that, in terms of all your chip manufacturers. They can't get enough chips to put into computers and cars and those sorts of things. So that's making them more valuable. We're seeing second-hand vehicles go up in price, like cars are going up in price, second-hand ones, because you can't get the new versions or other versions of it. Same with motorbikes, the same sort of things. A lot of people are selling second-hand motorbikes at slightly inflated prices of what they would normally get, and it could be 20% more or even 30% more than they would normally get in a normal market. So in that's more inflation created. But again, I think that's going to wash out over a period of time as the world gets back to work. But really, really good question. Nothing you really need to worry about for yourself, other than maybe paying a little bit more for some of the things that you might want to buy. But in terms of investing, it's really good. We'll still see both the property and the share markets rising, so don't need to worry about that too much, and just use that to your advantage. Now, the next question I do have, thank you very much for asking that sort of question. It's great. I'm not an economist, so I'm not really somebody who's going to be detailed. I think, go and read some reports on that and what some of the economists are talking about and getting into that. But again, from an investing point of view, I do like it, so thanks for the question. The next one is from Hoosh Gaming, somebody who's been put a few questions to us over the last few months anyway. He says, "Hi Dale, can I please get your thoughts on Boral? I've been monitoring this stock for a while and took a position in mid-March, so we're going to have a look at that one at $5.60 and topped up at $6.32 last week of April. So there have been positive announcements by Boral, and on-the-market buyback is ongoing with 122 million shares expected to be procured over the next 12 months. Thanks for another great video." So let's go and have a look at Boral and see what we think of that. Interesting question. Let's go and bring it up on the screen. You said you bought it mid-March at about 550, somewhere around about that. So that's November. I think so. I mean, go and look at the weekly chart, Dale, not the monthly chart. So somewhere around about 550 mid-March, somewhere in around about here you would have bought it, around that 550 mark. Interesting that where you've bought it. I don't disagree with where you bought it. I'm not sure what your rules were for buying it, but it looks really, really good. I don't know why you've topped up. I don't ever top up on shares. That's something that I don't do, because that would imply that you didn't take a position or proper position. Now, what I mean by that, when I talk about things in my book about position sizing, and indeed in our courses, we talk about 8 to 12 stocks. So if I want 12 stocks in my portfolio, I'll add 8% to every position size that I take, and that will end up over those 12 stocks will be roughly about 12 stocks. If I use 8%. If I want 8 stocks in my portfolio, I'll use 12% as the buy price. So let's say I've got $100,000, 12% of 100,000 is 12,000. That would be my position size if I want 8 stocks for my $100,000, or my $100,000 diversified into 8 separate stocks. So adding to it implies to me one or two things. Is one, I think this thing's going to be super, super bullish, and you want to get back in, you want to get more into it. But more than likely, it's probably you didn't take a position size that was commensurate to what you should be doing. And what happens when you buy multiple position size, you just increase your workload. You also you can increase risk if you don't do it at the right time, because buying it here and you've made some money on the first purchase, but what happens if it falls away? Every cent it falls away from the second purchase will be taking a cent off your profit through here. And people don't consider those sorts of things. It's more about what's the upside. So if you're really thinking it's strongly bullish, then I don't have too much of an issue. But if that wasn't your decision, or that wasn't in your thinking for the decision, then I probably don't necessarily agree, or I don't disagree with what you did. Right now, it looks really, really good. It was a strong positive week 2 weeks ago. Last week, a little bit bearish, but I think it's really, really nice. I'd probably manage this on a trend line at the moment, and a nice trailing trend line, a nice good stop loss. But good question. I do like the stock at the moment. I don't think you've got too much to worry about. The next question we've got is Yes Vegan, or somebody called Yes Vegan, who says, great content. Here is my list. Parsipal Technologies, Victory Square Technologies. Now, I went and have a quick look at those because I'd never heard of those stocks before, and it seems they're both Canadian stocks. So, and I can't bring them up here. I don't have data for Canadian stocks. I've only got US data, UK data, and Australian data. If I need other data like Asia and that, I get that from time to time when I went, but I couldn't look at those stocks because I don't have access to Canadian data. This is an Australian stock market report. I don't know whether you are in Canada and you're looking at that, because I find the research or the statistics I'm finding is that about 1 in 3 people who listen to our Talking Wealth podcast that Janine and I do are from North America. So that's including the USA and obviously Canada. So 1 in 3, and I believe it's probably close to about 20% of people watching our YouTube videos are from North America as well. So you may be from that. It would have been nice for you to say, hey, I'm from Ontario, I'm here from, Whistler or wherever you are in Canada. Love your content. Here's a couple of Canadian stocks. Would you have a look at? But we don't do that on this show. So I'm apologising. I can't bring up the data and I can't talk to you about those. But thank you for watching our show, and please keep watching the show. There's a lot of good content on it, even though I'm not talking about stocks. I don't even talk about US stocks on our Australian report. I do that on our US reports that I do for Flix, that's flixx.net, and I do those every Monday. I get into that and look at the US stocks, but Canadian, not quite. As I said, I don't have the data for that. The next one we have, thank you for asking your question, by the way, too. Sorry, I couldn't answer it. The next question we have is from Control. Somebody called Control who says, hello, may I know your opinion on FMG and Hack? Now, FMG, Janine and I covered that in our last week's live show, so we did have a good look at that for a few minutes. So go and have a look at that. You'll get our thoughts on FMG. So that's last week's live Australian stock market show, which was the Tuesday night. So go and have a look at that. It's around about 25 minutes into it, roughly-ish, maybe 30 minutes into the video, you'll get to the analysis on FMG. But let's go and have a look at the other stock that you were talking about, Hack, which is the one here now. Hack is an ETF on cyber security. So we've looked at this before. Janine and I have looked at this a couple of times for our live YouTube show, and you can see here how it's on the monthly chart. It's quite trends quite well, and we don't have an issue with this because with ETFs. So while I said earlier in my report, you're better off with not having index ETFs. And I really strongly, it's not me, I'm not against ETFs per se as a blanket statement. Well, I'm not against ETFs. I just think people with an ETF, if you're buying index ETFs, you're not looking after yourself. You're really not. It's just a managed fund. That's all it is. And people will buy an index ETF and buy and hold that. And really, and they do so because they think they're going to get greater diversification, as I said earlier, and they think they're going to get less risk. You're not. You're still trading with one, and you don't necessarily have the liquidity there and everything else. If you're in a specialist area like this, now this is cybersecurity area, so Hack is a cybersecurity stock. So to me, that's a specialist area, like robotics, like rare earths, like other areas could be like medical marijuana, or it could be something. Different areas that you may not be expert in, and maybe a lot of the stocks aren't that big to be able to put your money into it. There might be highly illiquid types of stocks. Could be alternative energy type of stocks, things like wind or wave technology. There could be stocks like that. And Janine and I have talked about those, I think, a couple of weeks ago in our live Australian stock market show there. So you might want to go and watch that one as well. But Hack, I don't have a problem with. But let's go back and look at the chart, and you can see how well it trends. And this is a monthly chart, and it moves up and down and around this sort of line. I like it at the moment. I think if you like the cybersecurity area, I think it's going to continue to grow cybersecurity because we're seeing lots of issues. I mean, obviously, Apple's come out with its new updates on its iOS system saying, well, hang on, we're not going to let Facebook do what it's going to do. We're not going to let a lot of these apps do what it does with tracking you. So cybersecurity is something that's quite important to a lot of people, and it's really pushed down our throats a lot to look after our own data, and I think there's going to be a lot more in that area. But right now, it is looking a tiny little bit weak on a weekly basis, but we may see it drop down over the next couple of weeks. But you don't say whether you own it or you don't own it. But right now, I don't have an issue with this stock, and I think if you want to use an ETF to get into this area, I think that's pretty wise for yourself to do that. But so thank you very much for sending your question in. But let's get to, thanks to everybody who sent their questions in and made comments, and we do helped you with our answers, even though the gentleman with the Canadian stocks, I couldn't answer your question, but now you know why I couldn't answer your question. But if you are sitting there watching and have any questions of your own, just stick them below. We're happy to answer them for you. Now remember that here on this channel we do these Monday market reports each and every week. We also do our live stream, which I've mentioned, which is every Tuesday night between 7 and 8 p.m. Janine and I we take a look at lots of stocks and we answer lots of questions. So please Check us out tomorrow night between 7 and 8 p.m. Also remember to hit the subscribe button now and click the little bell on the right of it. That way you know when we upload and go live, or upload videos and go live. It also shows your support for our channel and the team that bring this through to you. It's not just myself sitting in front of a camera trying to do this. We have a large team of people putting a whole lot of stuff together to make it enjoyable and entertaining for you. So please hit the subscribe button, as it says thank you to them too. Now, I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.